want to take you away.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 17th day of May, a very auspicious day, and we'll go through the reasons why. I think the E-mini is just about to attempt another little bounce in the 10-minute chart. Stochastic's down 11%. MACD is very negative, but the histogram is attempting to turn here, maybe from 2368. The low this morning at 2366.25, just 2 points higher. It's going to try to bounce. Maybe 2373 will be the big test. All right. Why yesterday were we talking about the VIX index, about the reason why we, for my opening call subscribers, we still remain short the Dow? What's going on here? Why the SMHs, that is the semiconductor ETF, and the QQQ series, that's the power shares, holding everything well? And when I said to subscribers this morning, we can't just go down on political news. It's got to be economic bad news. And in fact, you really have to be impacting the semiconductor index negatively to be able to sustain a move to the downside. Now we can go through everything. The Dow is down 271 at 20,708. The S&P is down 30 at 2369. The comp index is down 112 at 6,057. Gold, obviously, I shouldn't say obviously, gold is participating on the upside. It's up 22 at 1259. Currency of fear, one of the reasons why for my subscribers, we do have a gold stock, which is on a percentage basis doing fabulously right now. Silver is, in fact, up 25 cents at 17. The DAX now is down 189 at 12,612. This is going to be a very interesting market because crude oil is up 51 cents at 49.51. High-grade copper is back down at the 2.53 area. Bonds are up at 1 and 30 seconds at 153.07. Remember, we'll be talking about the TLT and that there was a chance that bonds could become a safety factor. That's what happens, a haven for just keeping your money, so-called safe money. I'm going to talk about the Chapman Wave stalk leg formation, what happens when the beak completes, how there's a fabulous move to the upside, and then you're on your own. We'll talk about that in a minute. And the dollar, of course, right now is down. It's down 54 cents at 97.45. It has plunged from that 99 area where it was trying to hold court. Let's put it that way. I think I've covered most of what I need to do. I need to do this right now. Here you've got the E-mini at down 29 at 2368. That is a peak F/G. A peak F says watch out. A peak D says watch out. Why? In the Chapman Wave methodology, that's where you start to see whether the stochastic, which is I've been making a big deal about this with my subscribers, the stochastic was turning down. Price might be holding up, but stochastic's turning down. It's now at 62%, way under the 80% cushion, and the MACD finally crossed sharply negative. But it was the weekly chart that I kept making a fuss about in the Dow and the S&P. I said if the MACD deflects lower, this is going to be what I call a Chapman Wave drop bucket, double top formation, a cup formation that fails on the right side. Just make it as simple as possible. Here's the 120-minute chart, made a peak E at 2404.50, and a left side, right side price time match. They got there a little early, couldn't hold it, now it's in a leg C to the downside. Okay, enough already. Let me just go through the thinking. The thinking was that within the Chapman Wave methodology, let me open this up a little bit. These are two of the same charts. They just got different technical indicators on them. And what we were looking at is this large cup formation. Let me just make it like this because I want you to show a very optimistic way of looking at it. If it was going to go to a higher high, I didn't think it could be. This one here is much more prescient in the left side, right side price time match, which failed. So what I was looking at is in the Chapman Wave 5, we did a 5. This is just in concept, it was instigated by Elliott Wave. It actually has, at this point, it has so little to do with Elliott Wave other than the 5. So what we've got is a 21,169. We've got on the 1st of March, we've got a Chapman Wave 5 at a peak G, unusual peak G top in the Dow. The Dow starts to pull back, and it takes 10 weeks. This is the 11th week, but it takes 10 weeks, and it just cannot break anywhere close to the 21,169. What it did was it did a Chapman Wave 5 to the downside, and that was a trough D at 20,379 on the 19th of April. And then it had a rally. And that rally was with gaps to the upside, but purely emotional. But it wasn't just emotional. It was accompanied by the NASDAQ top stocks pushing, the handful of stocks starting to push higher and higher. And we'll get to that in a moment. But let's finish up with the Dow. I assessed that this was an X. This was the start of another move. At first, I thought maybe it's a Chapman Wave, and this was a 2 in the Chapman Wave 5 count, but nah. I said, no. This is an X, and we're actually counting it on the wave down. 1, 2, 3, lower lows and lower highs. And then I said yesterday, if the Dow goes above 21,046, it negates that pattern. I don't think it's going to, but let's see what happens. And what did it do? It went to 21,033. That was wave 4, and that's where it stalled in the 120 in the daily chart. And that said that we should now get a 5 to the downside. Wow, is this a 5 to the downside? But look what's happened. We've hit the trend line exactly. And that's saying to me that a chunk of the move down on the day, at least for this moment, might be accomplished, and now there's going to be some form of stability. However, you have plunged under the 9-period exponential moving average, the thick red line there, and that really is a big negative. Once you do that, you could set that as a very strong resistance area, which is at 20,875. That's that particular chart. And now we get to the other chart. The same thing on the right is the Dow Daily. And you can see the maroon line, the red maroon line, which is the red maroon line. The 9-period exponential moving average maroon line, in this case, it's blue on that one, it's red on this one, has the MACD deflect lower, and the stochastic, which I said was very weak, and the unbalanced volume was at lows, could not get off the ground. It was a huge sign. I mean, people use volume. I use unbalanced volume, used it for decades. And I find for me, in my particular analysis, it really makes a difference. So that was saying no strength to the upside. And now we've got leg D to the downside. Okay, D is where we've got to start looking to say, okay, maybe we'll try to find some kind of support here. However, when you go to the 120-minute chart, if I've got a moment, just a moment, I'll do a 120-minute chart. There was also a Chapman Wave 5. Look how many Chapman Wave 5s there have been. Now, I must admit, there are occasions there where I've had to alternate and make a wave up on a wave down, but actually using it as a tool, it's really become extremely helpful. And that was the X that started 1, 2, 3, 4, 5, and now we've got a plunge to the downside, another D. So not only did you have 2 Chapman Wave 5s in the daily and the 120, now you've got Ds on the way down, and we'll see where the support will be. Basil Chapman, Tiger Technicians Hour. I'll get to all your questions in a moment, and some of this preamble before. I want to look at a closer look at bonds, etc. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So when we're looking at gold, gold is trading at, let's see, 1259.1, up 22. It's in leg E. It's had a fantastic move. Very steady, actually, not a screaming straight up move. This last move, of course, is straight up, but basically, look, I always say that in most markets, prices come down at the same speed as they go up, except in rocket ship mornings or rocket ship phases intraday, or even on a weekly, monthly basis. It can happen, but mostly it's on a shorter-term basis. The rocket moves to the upside. But downside, you can get some major thrusts to the downside. And those crashes to the downside, even on a 2-minute chart, it doesn't happen that often. So if you look at the 1269.7 top that was made round about the 1st of May, 2nd of May, was that the evening of the, that was the 1st of May at midnight, I guess. What we're looking at is it came all the way down, and it made a low on the 9th of May? Yeah, 9th of May at 4 o'clock at the close of the day session. And then it moved up. And look, it's just missing by 1, 2, 3, 320-minute bars trying to get to the 1269.70 stop. Look at that nice bull formation. Even with all that's going on here, it's the same number of bars to the downside as it is to the upside. Funny how that works, okay? Let's look and see if we can do the same thing maybe with crude oil. So crude oil made its peak D high. There's also a pattern on the left side, right side price time match. Now it's trying to make a cup formation. It's kind of stalling. Unless crude oil can spiral above 49.66, the high that was made at 10 o'clock on the 15th, it's kind of stuck in the, kind of trapped. Let's look at the ESM, that's the E-mini, plunges down to a leg C, goes to 2360, what did I say the low was? 23, I should remember that, I just read 66, I think, yeah, 2366.25. It has like an A to B equals C to D. This is the lightning bolt to the downside, but it hasn't yet gone, which says it should really go to the 2355-ish level. So at this particular point, the stochastic's trying to rally. It's making a W formation. It's going to take a lot more to get the energy up to be able to get to the 2382 9-period moving average on the 120-minute chart and the 2384 level of the 200-period moving average. But look at this. This was the left side. I picked this as a left side, right side price time match. Yesterday, I think it was, as I was studying the gold chart, the 120-minute chart, it hit it exactly 2379, went to 2379.25, then bounced, and then bam, there was that failure earlier this morning. So now I think we've covered a bunch of things. What I do want to do is right now, I want to tell you the TLT had a very strong move to the upside. It had what I call the Chapman wave stalk leg formation. It went from a low of the 13th at 116.49, almost straight up, went to peak C, then it hung around in an oval formation. It's not a rectangle, it's an oval formation. It must be oval for the body, so the leg, the body. That says there could be a neck, a head, and then the beak. When the beak is complete, you can get a very strong, powerful move. If the beak takes out the top of the oval, that's the body, in this case, 122.25 after making 124.98 peak F, top right of the 200-period moving average. What happened was it came down, trough A, trough B, trough C, trough D, trough E, trough F, concludes the beak, and now we've had a powerful move. And what is the normal thing in the Chapman wave methodology, once it takes off, you can go for 5, maybe 6 bars, and then you're on your own. In other words, there's a big rally, but now you're going to see what happens to the yields. Now, this is going to be very interesting because my concept has been over this period that we will see the market continue lower if the TLT finds a lot of buyers and becomes a haven, a short-term haven for security as people migrate from equities into the so-called safety of bonds. Well, we'll see what happens. We're going to go to George in New York right away. We want to talk about NVIDIA. I'm pleased to call. George, how are you?
Basil, good morning today.
Good morning.
As we were saying yesterday, I wanted to look at the mistake I made on selling too early on NVIDIA.
So there are a couple of things. One is you got into NVIDIA at what price? I know it was much lower down.
Okay. As you know from my past calls all these years, I'm more of a fundamental investor. So with that
Correct,
said,
yes.
I purchased that on August 11th, 2011 at 13.15 when I saw it starting to break out on a daily chart. Fundamentals were good. My future price was good on it. So with that said, I liked what I saw. I liked the assets. I stepped into it, and I went long. And I stayed with it. As long as I was seeing the quarterly reports coming out, everything looked good.
So now, there's one thing that I need to, well, the two things that I need to ask you is a part A and a part B. When it made its high back in 2017 in February at 120.92 and it came down, as I recall, it wasn't a big miss, but it was a disappointment, an earnings disappointment. It wasn't, I can't remember the figures. I just remember that it certainly wasn't bad, but it wasn't what they were looking for. And I think they said something about the outlook. And so is that something that impacted you for at least?
Yes. What I saw, there was a volume high distribution on December 26th. 2016 that week.
Okay.
And
yes,
so that gave me the red flag right away to start looking deeper again, because I look at numerous positions so constantly. And what happened was when I saw that distribution day, I was a little concerned. So I started to look a little deeper. And I was going over the company fundamentally, and I really saw it was overvalued at this point.
Okay. So I just wanted to say, with that reasoning, with the fact that you had almost a 10-bagger, I don't see any reason for you to berate yourself on getting out of a very good entry point and getting in at a very good entry point and getting out a little early. I personally was looking at that peak that was made at 120.92 and thinking, hey, I've got an E in the monthly, I've got an F in the weekly, the technicals are starting to fail. To me, what happened over the last 2 weeks is not what I would have, is absolutely not what I would have anticipated based on the actual chart formation. And that's why every once in a while, what happens is, I always say that if you look at the charts long enough, you can see that within it, you're doing an MRI or an X-ray of the patient, you can see a lot of information. But sometimes reactions to earnings reports, it's not always, you can't always get it. Now, I wanted to just explain one thing that I looked at, which I did discuss recently as a potential, but I wasn't sure it was even going to go. If you can hold on, we'll talk about that.
Absolutely.
And it's the move that came down in April. I'll talk about that.
Yeah,
the Dow's down 244, S&P's down 26. We'll be right back with George in New York, talk about individuals.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And we're back with George. And what I want you to say, George, is there's this pattern that I often talk about. And this is something that came to my attention, I think it was about 3 weeks ago, and I mentioned it. I said, I don't think it's going to happen, but I do have to mention that I am very, very familiar with this particular pattern. I'm drawing it right now, and it is the H pattern. And what happens in the H pattern, if the left side low is tested, and even if it takes it out, but takes it out by a fraction, there's a good chance that if the technicals are turning around, you can have another bounce. There are three different ways of treating this particular pattern. But if it does take out the left side low, then you can expect a rally that should not break above the previous arch, and that would have been at 110 round number high back the week of the 31st of March. We're looking at NVIDIA. And what happened was it was just so sudden that the news came out and was so positive. However, at the time before the news came, the earnings came out, I kept saying to myself, wait, NVIDIA Corporation, I remember reading in Investors Business Daily, they're into graphic processing for workstations, games, mobile devices. I mean, what's hot? That's the hot area for a while. So if they're not doing well, then everything else should be tumbling. So the fact that they came out with that news, for me, it said two things. It said, number one, that if the earnings are received very positively and it goes higher from there, then maybe that whole semiconductor area isn't quite ready yet to turn down. Let's see what happens there. And the other thing is that when NVIDIA and Applied Materials, where's Applied Materials right now? Applied Materials is sharply down, and I've got this at a B. That is really weird because the weekly is at an E. So those have been the very hot areas. So I'm going to say to you, I don't personally think, the only thing I would have said to you is if you are going to get out with that kind of a gain, I would have kept a little bit, just kind of for old time's sake, whether or not it went up or down. And that
was my definite mistake. I agree.
And that's the only, I think that's the only mistake, and I wouldn't even call it a mistake after a look. You've done extremely well. Yes, it went 20 points higher, went 20% higher in a very short space of time. I think it's going to give back, and I think it's the big test for NVIDIA is how does it treat the 123 level with the 9-period moving averages, and then 118 would be next. Because if it takes that out at any point in the next 2 weeks, it gives back all these gains. And you know what? When I'm looking at the SMHs, one of the things I said to subscribers this morning, this is part of the semiconductor index, one of the things I wrote to subscribers was that it's all very well if we have a political decline right now, but that's really not good enough for me. I have to see that the top sector, the QQQ and the SMHs, are going to be impacted negatively, and not just a day or two. It has to be a persistent selling, because if their earnings have been, which they have been absolutely fabulous, you usually get a major sell-off when at least one of the big guys comes out and says, oops, and nothing's right. This is the outlook is very poor. So far, no one's not. I don't think even Intel has said that. And Intel's been one of the worst acting of the semis. So I'm looking at this and I'm saying I don't really have a signal yet to say NVIDIA is about to really tank, but I do have a signal that says under all the conditions that I'm looking at, I would not be surprised if it's at 130 right now, that it hits 123 before it gets to 140 or 141. That's really the way I'm looking at it.
And in my back testing, I did overlook one thing, and that was on the monthly charts. And I work with bar charts. I don't use candlesticks. So with that said, what I noticed, I think I overlooked, was one was a monthly outside bar, and two was it formed a pennant. So we really have a target now of even higher.
So what I'm looking at here, and I believe I'm looking at it in the semiconductor index as well, this is leg C at 82.81. A worst case is a test between 76 and 72 on the semiconductors. At this particular point, it could get worse, but that's what I'm looking at. There's an up channel support area that says the 78, 79, 78 area should hold. The moving average and the 9-period moving average in the weekly is at 80. So, and it's just testing right now from a peak D. The semiconductor index is down 2.5%. Biggest down move it's had in a really long time. And I'm just suggesting that the clues will come when the very best sector starts to stabilize, and that's what we have to look for. And you know what I'm going to suggest also? don't take your eye off NVIDIA because you might find that on the next pullback, because it's still in an area that should be very successful, if there's going to be another major move to the upside when this whole correction is completed, NVIDIA should participate very well. And as a former leader and then suddenly becoming a leader again, because for a while, the whole way through, I think it was at March, right from February, it's been it was declining. It just wasn't doing anything. So now it's back in play. But I would hold off. I think you need to keep your same homework up. You don't have to jump in. You have a fantastic run. I tend to think when I'm in something that's done very well, I tend to stay away once I'm out. Just give it a little bit of a rest.
Normally I do, but the techs are such high flyers. I get a little concerned. That's why I did what I did. Plus, it was starting to ride against the 30-week EMA. So I was concerned if it was going to drop my weekly 30-week EMA.
And George,
the other thing that was really concerning me was the PE was very high. So the payback period for anybody to buy into the stock at the current price would be about a 10-year payback period.
Oh, so that's a long time.
In my eyes, it was overvalued.
Okay, so now here's the other thing. People in the den are saying, congratulations, fabulous entry point. You should be complimenting yourself on the great decision to buy, not the sell. And I agree. But what I would say to you is keep your eye on it. I don't think it's a lost cause. I just think that it's due for some kind of a breather. And a good chunk of this candle that was made last week that went from 102 to 130, I suspect that it's going to give back some, and then we'll be looking at it again. But in the meantime...
And I just also thought it was a good forum to call in to talk about, maybe selling prematurely or not selling prematurely, and what's the reasons, and for back testing as well.
Well, but two things, George. First of all, I wanted to say the one thing was the entry point. The other thing is that selling prematurely, first of all, taking a profit is always a good thing. But I know that in your case, there were certain parameters that were met. Everything kind of was met. And the only, I don't even think it's a fault. The only reason why I'm saying to you that I probably would have said to you, take off as much as you want, but keep a core. Just kind of congratulate yourself. It's been a fantastic stock, and you never know what's going to happen with it. That's the only thing I would have added. Just keep a little bit there. And even that wouldn't have made all that much difference. But, hey, you did a fabulous thing. What happened recently, that was unexpected.
Thank you for calling. Much for today. I appreciate it.
Thank you very much for calling. We'll be back, folks, with Dow's down 246, S&P's 26. Yes, there was a little bit of a bounce. We'll see where that's going to go right there. Yep, we're watching the 2375 as resistance. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I'm busy doing this chart, and as I'm doing it, this is the 2-minute E-mini chart showing the left side, right side price time match that by 11:56. The 23.77 level could be reached. It's at 23.74.50 right now. And I just remembered I had an email from someone, if I remember correctly, it was from Pennsylvania somewhere. And this lady was, her husband's birthday was coming up, and she had sent me a note wanting to know about some courses or anything, something like that. And I said it as I can't remember what I did with it, but then I had trouble with my emails, and my computer guy reconfigured a bunch of things, and I don't have it going back. In fact, just the week that it starts up again, the emails. I don't have it the week before. Somewhere it's there. So if that lady, if you're listening, if you want to send me another email, I'm so sorry. I was going to reply right away, but I was thinking it through. And then I lost about 4 days now. I've been trying to find it. I cannot find it, that email. So if you want to email me again, I'd like to hear from you. All right. Now, what I'm really looking at, and this is going to be very important. You remember I spoke about the Chapman wave stalk leg formation when it's finished, the beak of the stalk, that long nose that points down. When it's complete, there's a very nice rally off that. So I wanted to say that there are a couple of things going on. If you look at gold, if you look at the GDX had the same thing. There was the leg, the body, the neck, the head, and the beak. And the beak is finished. And look at this powerful move. It's in leg C, gray C to the upside, 23.13, 23.05. Yeah, this is gray leg C. Why is it gray? Because it hasn't made a new recovery high. So it has to get above 24.88. Now I'm thinking, and this is the reason why I'm looking at this, and I'm saying, this is more an emotional. I don't know anything constructive right now for the market to continue going down without bad news just permeating the market every hour of the day, for the next few days. I'm thinking that I need to hear some fundamental bad news. That is some economic bad news for this to be sustained to the downside. And that's the reason. Now, Steve Rose is giving a webinar tonight. It's tonight. And it is at 5:30, Mastering Probability, the Trader's Edge. He's doing 5 essential patterns for timing the market. So that'll be really a wonderful education if you want to go to it. What I'm looking at here is that within the context, how can I put this here? There we go. Within the context of chart patterns, if you're looking at the gold miners, the GDX, there's a lot of resistance just above. So I would contend, and I'm telling you right now that the dollar bill, look at the dollar in a moment, that the dollar, we're going to know, I'd say that last week into this week should be quite important in finding out which stocks, multinationals, are being impacted negatively or positively by the dollar. So that's what I'm really looking at, because the gold contract, try to put it together, had the weekly chart pulled back a little too deeply. I'm a little concerned about that. I'm not yet sure that gold is on its way to a brand new bull market. It's a really good move. It's an emotional move. I want some fundamentals with it. I want to see gold not at 1257 or 1267. I want to see it above 1275. That will say to me, aha, you're going to go to a leg D and you're going to improve the monthly tremendously. I'm not being negative on gold. I'm just saying that it should have moved higher earlier and it should be higher right now. And I don't know quite why it is, because the dollar is absolutely starting to break down. Look at that. Spoke about it yesterday. I said it's not good that the dollar is underneath this long-term uptrend blue line. Look at that. Breaking under it for 2 weeks, 3 weeks on it 3 weeks ago, 4 weeks ago, under it 2 weeks ago, closed under it, but went above and below last week, and now it's sharply lower. The dollar is saying it's got a bit of a problem. If you look at the euro, EUR/USD, the euro currency pair, look at this. It's spiraled through the resistance. It's in leg C, recycled. I'm calling this an E for now, but it might have recycled in the daily chart. But at least for now, I'm calling it an E. But it's raised the base of support from 1.11 right now to 1.09, in the 1.09 area. So when I'm looking at the weekly chart, remember what we discussed, and I said this a long time ago, when the Chapman wave lowercase h pattern becomes a lowercase m, and the right side of the m takes out the left side low of importance and then bounces back, that could give you a much bigger arch formation. And that's suggesting that the euro dollar trading at 1.113 could in fact go to test the last peak of importance right here, and that's 1.12989. That's the high of the 11th of November, the week of the November 11th. So I'm watching this all, and it's in leg C in the weekly, and the weekly has made it quite clear that being so strong in leg C, it should go to a D in the weekly chart. And if you look, remember I outlined this just way back a long time ago. I said, look at that rectangle. It's still within the rectangle formation. So I wanted to go through some things like that. Now, I use GE. I use a bunch of indicators, but GE is very important for me. It is a bellwether, and it hadn't yet yesterday gone one-to-one to the downside in this pattern that I showed, this one-to-one Chapman wave. It's called the Chapman wave one-to-one parallel count, and it says that you can get a price movement that goes straight down, bounces just a little bit. It's the lightning bolt A to B, but the difference here is it gives you the angle of containment. In other words, it shouldn't stray from this degree. I don't know what that degree is. Let's call it 28 degrees, 25 degrees. It's got a 25-degree angle down. That 25-degree angle down says that it should get to right here, 27.63. What's the low today? 27.43. So it's done us one-to-one. The MACD is very, very ugly. Stochastic is actually at 18%. And it looks like it's got room to go down. But if there's a rebound in GE at minus 42 cents right now at 27.62, we'll watch the market to see, can the market rebound? And I was saying there's a divergence between the horrible action of GE and the market holding well. The Dow was holding well, even though it was under the all-time high, and the NASDAQ was going to all-time highs. So that's going to be very important. So, GE getting the Boston share, that's for sure. Now, so questions that I have, let's do this. The XLF, yields are the TNX is from its, you remember I said, there are so many techniques under the umbrella of the Chapman wave. It's just, I would take 2 hours just to enumerate what they are, let alone explain them. There was a peak D in the 28.15, 28.15, 26.15, 26.15. Double top on the 10th of March, 13th of March. It comes down in that 1-to-1 move to the downside. Here's the 200-period moving average, and it goes peak A, peak B. And I said, I'm calling this a phantom D. Everything about it says there should be an actual D where it would be a C on the 11th of May in the 10-year T bond yield, T note yield. And look at the sharp move. It's going towards 22.16. The 200-period moving average is at 22.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet, this puzzle can be solved in 20 moves. Knowing the right move makes all the difference in the world, and on Wednesday, May 17th at 5:30 p.m., I'll share with you the 5 essential patterns for timing the market so that you can make the right moves and become a better trader and investor. A few weeks back, I showed you how to spot a bear market with 2 moves that the market always makes, and on Wednesday, I'll unlock the 5 best moves for timing any market for any time frame. To gain access to this extraordinary 1-hour workshop, test drive my newsletter service, Mastering Probability, for the next 30 days for free. Just visit the homepage at TFNN.com and click on the link, 5 Essential Patterns for Timing the Market, and you'll be able to attend live as well as review this workshop anytime during the next 30 days. I'm looking forward to helping you solve the puzzle of the markets, and I'll see you on Wednesday, May 17th. TFNN.com. We've got your back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or Swim. Next on TFNN.
Folks, great programming coming up. I mean, that options program is just terrific with Kevin. We've got, straight after that, you've got Steve Rose. Steve's doing the workshop tonight. You've got Dave White. I just had time for a moment to hear Dave talking about how negative he was on the market yesterday, and I concur. I mean, that great call. And then, of course, Tom O'Brien back again. Just check out what's going on at TFN. My service is the opening call. A very comprehensive look at the markets. I explain why we're looking at whatever it is we're looking at. I explain what the parameters are every day. This is what I do. Let me just do this here. This is my overview. My overview of market today. I talk about these 5 quadrants. I talk about the 120-minute Dow, the 120-minute VIX index, the Richard Arms Trin Index. Here's the bar chart of the Dow, bar chart of the S&P dailies. Then I'll tell you well, what's going on. And I talk about the dips mentality won't change, and there's persistent selling. That means that if today there's a bounce to maybe only 170 at the close, minus 18 at the S&P, then all of a sudden you've got back into this buy the dips mentality. However, if you're looking at selling going into the close, that's going to be very nervous selling. And then we could see continuation through the week, and that's going to be very important. I spoke about the Dow. Where is it going? There it is. Here's the whole preamble that I gave about the Dow daily, the 120-minute chart, Chapman Wave 5 should be a pullback, etc. Just a very comprehensive look at the markets every day. And then I have about 20, 21 bullet points for my Traders Corner, things we might not be trading, things we are trading, give parameters, very comprehensive. I hope it's very helpful to subscribers. Now, you're about to wrap up, and what I wanted to do is this. Within the context of markets, what we're really looking at here is, if you're looking at the commodities, this is a really important time. Look, corn is trying to come, there it is, trying to come off its low. Wasn't acting very well. Corn's up 4 1/4 at 372. It really has to move right now. And soy has to move right now. It made a peak E. I thought that it might consolidate a little bit, and it has. This is a weekly chart. It's really important. Soy has to go above 989. Sugar, I'm kind of favorably inclined towards sugar because it made the 1-to-1 to the downside. I think it's in a rally. Let's see what happens there. Looking at crude oil. Well, crude oil is up 67. It could make a leg D. I'm really watching to see how it can tackle the whole 50.80 area to the 51.90s with the 200-period moving averages. This is a nice bounce. I was asked, is it tradable? At this particular point, because the dollar's pulling back, maybe you can see sometimes there's an inverse relationship. So maybe, yes, USO and crude oil could rally a little bit. Watch gold. It's really important. If gold up now 19, giving back a little bit, if it continues with another powerful move tomorrow, that's going to be really important. If all of a sudden it just is like up 2 or down 3 and it closes that way tomorrow, it's saying, you know what, I need to see the semiconductors and the QQQs really take it on the chin and stay down, because at this particular point, buying is going to beget buying. That's the order of the day. I want to see the QQQs break. It's already done that. It broke the 9-period moving average and it's still much lower. But I want to see it tackle this doji candle of the 4th of May between 137.43 and 136.56. If it goes below 136 in the next week, finally we've got ourselves some kind of at least a short to intermediate term pullback in the QQQ series. We'll watch this real closely. Have a great day, folks. I'll be back tomorrow. Check out my opening call and stay tuned for some great program. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.